Hi, my name is Justin Haskins. Welcome to the show. Today, we're going to be talking about something that's, just a little bit depressing. One of the largest economic crashes in American history could be right around the corner. I mean, I hope I'm wrong. I really, truly hope I'm wrong. But the data seems to indicate that we're headed for really, really tough times. Before we get into that really happy news, though, let me introduce myself. My name is Justin Haskins. I'm a writer and editor. I work at a think tank, the Heartland Institute. I've written a New York Times bestselling book, actually 2 New York Times bestselling books with Glenn Beck, television and radio appearances hundreds and hundreds of times, Fox News Channel, Newsweek, the Blaze TV, you name it. And now I've started my own channel. So you can help me out on this channel. I'm here to talk about stories that the media, generally speaking, aren't covering. And in order for people to reach this content, because I'm still a new channel, I don't have a ton of subscribers yet, you can help by liking the channel, liking this video, by subscribing to the channel, and by leaving a comment underneath this video. All of these things are going to help break through those big tech algorithms that are suppressing content by people like me, people who are promoting a pro-liberty free market message. So please comment, like the video, and subscribe to the channel. All that's going to help me out a lot. All right, let's get to the topic. Let's get straight to it. Recently, I wrote an article for Newsweek that talked about this really incredible thing that we're seeing in the data that just, for whatever reason, I just don't see anybody talking about this. It just blows my mind that the media isn't covering this. But kudos to Newsweek for running the article. It's titled, "Bidenomics is Heading Toward a Crash. The Latest Housing Data Could Not Make It Clearer." And here's my argument, essentially, in a nutshell. Historically speaking, one of the biggest indicators that you want to look at when you're trying to look into the future and figure out when a big economic crash is coming, one of the most important indicators that you should look at is housing data. There are a variety of reasons for why I think that that's the case, but the bottom line is this. Historically, when housing prices go up very quickly, so I'm not talking about steadily over a long period of time, but when they shoot up very quickly, that is almost always an indicator that soon afterwards you're going to have an extremely steep decline relative to what we saw in the terms of the increase. Okay. And that can manifest itself in a lot of different ways. Sometimes it is a total market crash. Sometimes it is a stock market crash. Sometimes it is an economic crash, economy wide. But you almost always see a crash occur after you see housing prices shoot up very quickly. All right. Now, the reason why I'm concerned that we could be seeing a once in a lifetime type of economic crash soon. And again, this is what the data is showing. This isn't me just predicting out of thin air. This is what the data is showing. The reason I think that's a possibility, a very real and a very dangerous possibility, is because following COVID and the COVID lockdowns and the massive amount of money, trillions and trillions and trillions of dollars that were pumped into the US economy, housing prices started to increase relatively quickly. And then they started to increase incredibly rapidly. I'm going to show you a chart soon. If you're watching on YouTube and you or another social media channel, you'll be able to see the video. It'll show you the chart. It's a steep increase. It's a very, very, very steep increase. And that's kind of a steep increase is something that we really have never seen before in the data. Now, the data that I have access to only goes back to the 1960s, I believe, the early 1960s. But that's a long period of time. We're talking about 60 years worth of housing data. So before I pull up that chart, though, let me just give you we'll cut to the chase and give you sort of the summary conclusion of all of this. In the article, I talk about how Biden's been bragging about the economy and all of the wonderful things that's going on with the economy. And a lot of that is just smoke and mirrors. But he's not talking about this. Most people are not talking about this. So remember what I just talked about with the dramatic increase of prices in housing followed by a dramatic decrease. It almost always occurs that way. When you have a really sharp increase, a really sharp decrease is going to occur because it means there's something wrong with the market. You shouldn't have housing prices jump significantly in a short period of time. So from the fourth quarter of 2020 to the fourth quarter of 2022, so 2 years, the U.S. housing market experienced one of the most significant increases in housing prices in American history. So the data, which comes from the Federal Reserve Bank of St. Louis, they actually use data from some other government source, but it's the Fed Bank of St. Louis, shows that over that 2-year period, so fourth quarter of 2020, so this is after COVID has started, before Joe Biden becomes president, just before, to the fourth quarter of 2022, so the end of last year, the average sales price of a home, so this is sales price of all sorts of homes, new homes, existing homes, etc., skyrocketed by more than 36%. A 36% increase in the average sales price of a home in just 2-year period. It went from $403,000, almost $404,000, to $552,000. So $150,000 roughly for the average sales price of a home. That's an increase of $150,000 in just 2 years. That is incredible. For the first time in history, there was a 12-month increase. You had a 12-month increase in home prices that topped 15% for 7 quarters in a row, beginning with the second quarter of 2021. So from second quarter of 2021, for 7 consecutive quarters, we saw home prices increase by 15% or more. And that just doesn't happen. It literally has never happened before. All right. So we've never seen these kinds of increases in terms of total value of homes when we're talking about the sales price, or in terms of the percentage increase. Okay. So we're not playing with numbers here. All right. We're talking about in total dollars increase for sales prices and for percentages. We've never seen this kind of increase before. All right. Now, in the past, when we've seen rapid increases in prices like this, you almost always have a crash that comes right after it. So in the 1970s, we saw this. In the late 1980s, we saw this. It was a big correction in the housing prices. In the 2000s, of course, we saw this when you saw a massive correction with the Great Recession, 2007, 2008, into 2009, and so on. All of these things, as we saw the same pattern play out, rapid increase in housing prices, and then a steep decline that came right after it, and then all sorts of economic market, stock market, depends on the crash we're talking about, chaos that came in the wake of those crashes. So let's take a look at the data itself, so that you can see what I'm talking about specifically. All right. So this is a chart from the Fed, and you can see this goes back to the earliest point is the fourth quarter of 1996. I can actually scroll back even further. This goes all the way back to the early 1960s, 1963. And you can see this is the average sales price of a home sold in the United States. And generally speaking, over much of American history over this period, you have steady increases with some drops here and there, but you don't have sharp decreases. Not until you start getting into in and around 2000. And then you start to see this pattern start to play out. That's because the Federal Reserve started really ramping up their money printing efforts, keeping interest rates artificially low or lower than they otherwise would be if we were just looking at market forces. And they're playing with the market more. And as a result of that, the housing prices are becoming more of a boom and bust. All right. And we're starting to see that play out. And of course, you had the big crash. That's what this grayed out area is here. If you can see it on the screen, they had a really, really big crash that occurred beginning in 2007, and then it really picked up pace in 2008 into 2009, and that's what we call the Great Recession, right? Well, this period at the end here is the rapid increase, all right? So this is the rapid increase right here at the very end of the chart. Going from the second quarter 2020 all the way up to the fourth quarter of 2022. Let's zoom in a little bit. So we're going to lower the timelines so that you can see this more rapidly. You can see right up here, right? We've got this big, gigantic, steep rise upward in the average sales price of a home. So second quarter 2020, $374,500. And then by the time you get into mid 2020, we're way over $500,000. So just incredible increase in the value in the sales price of homes. All right. So with a rapid increase like this, we should expect to see a steep decrease. And that steep decrease could be a sign that we're having much larger economic problems coming down the road. And this is exactly what we've seen so far in the first quarter of 2023 and the second quarter of 2023. Now, the reason you haven't heard about this, well, before I talk about that, let's show you the chart. So here you have on the chart, all the way on the right-hand side, here we are, fourth quarter of 2022, $552,600. That's the peak of this. That's the highest sales price that we've ever seen in the history of the United States of America. And then we have an incredibly steep decrease. It went from $552,000 in the fourth quarter of 2022, $552,600 in the first quarter of 2023. So just a few months later, $505,300. So it dropped about $50,000 in 3 months, the average sales price of a home. Then in the second quarter, it dropped another $10,000. So literally, it's around $60,000 drop from the end of 2022 to the end of the second quarter of 2023. We don't see drops like this. In fact, it is the steepest decline that we have ever seen in the history of the United States of America. Let me repeat that. Based on the data we have, which goes back to the early 1960s, over 60 years, modern American history, that's that period, we have never seen prices of homes, sales prices of homes, increase as rapidly as they just increased or drop as rapidly as they just dropped. We've literally never seen it. Not in 2007, 2008, 2009, not in that period. That's the so-called Great Recession. We didn't see it then. We didn't see it in the 1970s. We've never seen it. It's never happened. In fact, it's never even really come close to that happening, not that rapidly. We've seen declines occur that are significant, but not significant declines that have occurred in such a short period of time. That is almost always a sign that we are headed toward a massive crash. So let me pull up the article again from Newsweek and give you the specific number. So I wrote it in here somewhere, but the bottom line is we've never seen anything remotely close to this ever happen. And it's not even close, right? So in the first quarter of 2023, I wrote here, housing prices declined by 8.56% compared to prices in the fourth quarter. That's the largest single quarter decrease since at least 1963. That's the earliest data that we have. And prior to that, the next closest number was 7.09%. So pretty significant. It doesn't sound like a lot. 8.5 versus 9, a little over 9. 8.5 versus a little over 7. But it is significant when we're talking about housing prices because every percentage point represents a massive amount of money in the price itself. So the next closest number we had was the Great Recession. So why is it that we haven't heard about this? Why is it that we've never heard about this? If we're seeing sales prices increase and drop at a rate that literally has never happened before, then why isn't anyone talking about that? Well, there's a few reasons for it, I think. The first reason why why the media isn't talking about it is because in the initial numbers that came out for 2023 for the first quarter, they looked bad when they first came out a little while ago. Maybe it was a couple of months ago or a few months ago or something like that. When they first came out, they looked bad, but they didn't look as bad as they now look. They came back and they revised the numbers when right around the time when they released the second quarter figures. So what we're seeing is new numbers. We haven't seen these numbers before. So I think there's just a lot of analysts that don't realize that this is what happened. They know that the first quarter 2023 numbers, that there was a sharp decline, but they didn't know that the decline was anywhere near as sharp as it actually turned out to be. So it went from being one of the worst quarters in history to being the worst quarter in history for sales price decline. We also have second quarter numbers now, which show a further decline, not as steep as what we saw in the first quarter, but still a decline, a pretty significant one. And so when you combine those two, we're talking about a massive decline in the average price of a home in a very short period of time. When you go back and you look at all the other periods, when we see anything close to this, we always have a big crash that comes afterwards. So the other reason why, I know I keep hammering that point home, but it is really, really important. This isn't just about housing prices. This is about the economy as a whole, and stock market and all sorts of other things. The other reason why I don't think that you're seeing the media talk about this is, of course, because the media doesn't want to tell you anything bad about Joe Biden's America. Most of the media cares, desperately wants Joe Biden to be reelected president, or whoever the Democrat Party candidate is going to be, if it isn't going to be Joe Biden, because I don't know, maybe he'll be in jail or something. Who knows what's going to happen with him and the whole Hunter Biden scandal. But the media doesn't want you to know any bad news about the economy and Joe Biden. So they're not telling you this, even though it is the most significant housing price decrease that we have ever seen. They're not talking about it. And I think there's a degree of bias here that's related to all of this as well. I don't think that explains all of it, by the way, because of course there are a lot of right-leaning media outlets that haven't talked about this either. I just think a lot of people haven't caught on yet. And because housing prices increase so dramatically, so fast, it's not like people are really hurting badly yet as a result of this decline. So you don't have a lot of the sob stories that normally come out. I mean, they are out there, I'm sure, but you don't have as many of them as you normally do when you have a big, gigantic housing crash, because you don't normally have quite the level of steep increase that we saw recently. Okay. So everybody is still, for the most part, the vast majority of people who own homes are still in the green. They're not losing money on their house at this point. They're not underwater in terms of equity and things like that. So that's part of the equation as well. But again, the point that I want to keep emphasizing is we've never seen this before. And every time we've seen something close to it, there's been a big crash. So I think one of the really important questions in all of this is why, right? Why is there an association? Why is there a correlation between big increases in housing prices, big declines, and economic recession, stock market crashes, things like that? Why do we see that? There's a variety of reasons for why this is the case, and it probably varies from situation to situation historically. But I think that one of the things that all of this has in common is that when a market is overheated, okay, when an economy is overheated, I should say, one of the things that happens is housing prices, I think, go up quickly. And so I think housing prices going up quickly are a sign of overconfidence in the economy. They're a sign that the economy is overheating, that it is not as good as it seems. It's really easy for the housing market to be one of those things where sort of people are feeling really good about things. The unemployment rate is low, and because of that, they think the good times are going to roll forever. They're willing to pay almost anything for houses. People haven't been unemployed for a long time, and so they do that. So I think that's a big part of it. The other thing is, and I do think we have an overheated economy in a certain respect. I think it's manipulated overheating. I don't think it's real economic growth. I think America printed trillions and trillions and trillions of dollars, and Europe did this too. And then they poured it into the financial system in 2020 and in 2021. And by pouring all this money into the financial system, they created the conditions for things related to the financial system, the prices of those things going up, and for inflation generally. So we've seen inflation across the board, from everything from, the price of a car to groceries to everything is becoming more expensive. And the reason why we've seen that is because of all the money printing and that money flowing through the economy. And I think the housing market is especially situated to have a big, gigantic upward swing when you print lots of money and you keep interest rates really low, because so much of that money in the financial system ends up going into the housing market, right? So it makes a lot of sense why that would be the case. Also, all the stimulus packages and all the free money that was being given to people who didn't lose their jobs during the pandemic and all of that was basically stored in people's bank accounts. So now they have more money to spend on a down payment, which means they have the ability to get a more expensive house. Now that we see that the interest rates going way up and the cost of buying a house becomes a lot more expensive, we're seeing the housing prices go down very quickly, right? So a sharp increase in interest rates means a sharp decrease in the housing market. Now, does that mean that the rest of the economy is going to see a similar problem? The answer is it's really complicated. It's entirely possible that that will happen. It's entirely possible we're on the verge of a very steep overall economic decline, similar to what we're seeing with the housing prices. There are many times when housing prices drop and then you have a big economic crash afterwards, or a big stock market crash afterwards. But housing prices sometimes lead the way. And again, there are a lot of reasons for why that's probably the case, but the pattern does seem to play out over and over and over again. You saw that in 2007, 2006, 2007, that once you get into 2007 and the housing prices start going down a little bit, we weren't in a great recession at that point. The recession came afterwards, right? Once people saw the effects, the overall effects of that. And the housing market touches so many other kinds of markets that I think it has a ripple effect that you don't necessarily see right away. So this is potentially a huge, 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 huge problem. And it is possible that we will, the reason why I'm not so definitive about a crash is definitely coming, like in the sense that I know for certain, yes, it's going to happen. My position is this is what the data shows. It's possible that the data and history will not align with what we're going to see over the next 12 to 24 months or longer. And the reason for that is because the amount of money printing that occurred in 2020 and following was so remarkable and so disruptive and problematic for economists that I think it's just really hard to know what's going to happen. There were just massive distortions all throughout the economy were created by printing those trillions of dollars. And so it's really hard to know whether we're going to see a huge crash. Now, some people will say, well, of course we are. There's no doubt about it. We're definitely going to see it. And to that, I would say maybe, I think it's a real possibility. The data seems to point in that direction, but there are examples, not in America, but from other countries around the world, where you have massive money printing, low unemployment, and then you end up with sort of an economic stagnation that happens. You end up with a flat economy. You end up with no growth. But you don't necessarily have situations where unemployment, skyrockets. And the reason why you don't see that is because they just print more money to make sure that people have jobs. And that causes more problems economically. And there's no real economic growth. The economy is it's all, as I said earlier, smoke and mirrors. It's all smoke and mirrors. But people don't necessarily lose their jobs. It's just the economy doesn't grow. People end up losing their wealth over time. The government ends up taking over more and more of the economy, but you don't have a recession where, you have 10% unemployment or something like that. So that's a possibility as well. We're just going to have to wait and see, which I know is not very comforting. The bottom line is, and really the reason why I wanted to make this video is, I just want people to be prepared. I want them to start thinking about what's coming our way potentially. Be prepared. Now is not the time to take massive, massive economic risks. Now is the time to make sure you have money saved up in the bank. Now is the time to make sure that you are in a good situation with your family. That you're in a good situation with a support network financially. That you are prepared for what might be the worst. Right? Like, it's possible that we could be facing a huge economic crash. You got to be prepared for that. And I want people to be prepared. And if it turns out that the crash doesn't happen and we just see a housing price decline, but eventually it recovers or it levels off or something, and we don't end up with a massive economic crash, that's great. That's fantastic. I hope that happens. But the data is telling us to be very, very cautious. So that's what we need to do. Okay. Thanks so much for watching the show. As I said before, you can help the show out. It's a new channel. I need your help, need your support. Like the video, subscribe to the channel, tell your friends and family about it, share it on social media, leave a comment at the bottom. Talk about what you think is going to happen with the economy. Leave a comment. I read all the comments. I read every single one. I want to know what you're thinking about this. Maybe I'm crazy. Maybe I'm wrong. Maybe I missed some sort of statistic that you've seen. So if you know about any data that I'm not aware of, please leave it in the comment section. I would really appreciate it. Again, my name is Justin Haskins, and until next time, stay free.